I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast show, and today is August 31st.
Yes, the last day of August, getting into September.
Yes. And we are doing a Phoenix market update. Lots of information. We're going to go quickly through some slides. And if you like what we're doing here, be sure to subscribe, comment, and like. We do this every week. I'd be happy to have you just join us every week. If that's, again, a lot of past customers are going to be watching this. So if Tom and I have done your loan before, again, if you have any questions or need anything, be sure to reach out.
Yeah. Okay. So let's go over what we're going to talk about today. Mortgage rates. Where are they today? Also, average hourly wages in Phoenix. Are they going up? Are they coming down? How about gas prices? Like sometimes they're up, sometimes they're down. We're going to take a look at those. Median home prices in Phoenix. Where are they? And how many active listings are there?
All right. So mortgage rates today, we see the average 30-year fix, according to the Mortgage News Daily, which does a survey nationally. 30-year fix is at little over 7%. Really came down from last week. And then the 15-year fix, we see at 6.44.
And the FHA, 6.67. And VA, 6.65. FHA and VA are always very, very close.
And again, Tom and I, these are the national averages. Tom and I, if you have any questions, we are mortgage brokers right here in Phoenix. Any scenarios, let us know. We'll be able to give you a personalized quote.
Yeah, and these are not based upon what our wholesale lenders are doing. Mm-hmm. Again, that's just based upon the national averages. So our rates are going to be lower, but that's a baseline for you. So
a lot of this information is about the greater Phoenix area, right here where we work. What are the 13 most populous cities? Because we're going to be talking a lot about, just when we talk about Phoenix, we're talking about these cities in particular because they have the most impact.
And the outlines of these cities are just awesome. So let's roll through them.
Yeah,
check this
Tom,
out.
You go ahead with this.
Okay, so we've got Phoenix, Arizona, the biggest city. We have Mesa. We have Chandler, Arizona. I guess we're all in Arizona. Scottsdale. Look at that thing. Glendale. We have Gilbert. We have Tempe. And we have Peoria. And we have Surprise. And Santan Valley, all the way in the far southeast valley. And Avondale. Look how much it stretches over into the forest desert area.
That's right. That's like the South Mountains right there. I didn't realize how much was actually in the desert.
And then Goodyear, too. A lot of undeveloped land. I don't know how much is desert versus developable land, but that's a large swath of undeveloped so far.
Central to the south of that city.
Mm-hmm. And then Buckeye. Look at that. I did not realize it was so
you have
dotted.
That's right, because like all the county, when the county annexes, or the annexation of the city and the county, lots of little islands.
Right.
So basically county islands, right? These little spots.
I'm glad I'm not that annex man.
So those cities right here, I wanted to show you this kind of what the ZipRecruiter, which is a job posting site, pretty popular. We looked at their average posting for jobs. Kind of interesting because the average posting or posted job pay is $21 an hour in Phoenix, and the average national posting is $19 an hour. I thought that was interesting. Again, that is the jobs posted.
Yep, jobs available.
Yeah, and this is the government data. It shows that all employees here in Phoenix, the average is about $32.84. So a bit higher. So those who are employed, showing $32 per hour, almost $33 per hour, and steadily increasing. Mm-hmm. It's showing the strength here in the valley. And unemployment is at its lowest, really close to its lowest, at 3.2% unemployment. So a lot of people are employed, very few jobs.
Yeah, and it took you having to go all the way back to 2008, 9, 10 in order really for that unemployment number to be a big number people talk about. Right now, no one's talked about it for quite a while. During COVID, yes, a little because you saw that huge spike, but people were in their homes. They weren't even talking to people that much. So really, unemployment has been a non-factor from a not even from a news perspective. It's just been so low.
Yeah.
It's been such a positive number.
So here's a little trivia for you guys. What city in the greater Phoenix area has the lowest gas prices? Well, we're going to show you this map. Maybe you cannot see it if you're looking at a cell phone, but it is technically, it says here on the map, I wrote down Chandler has the lowest gas price. But then Tom realized over in Apache Junction, there's $3.79. This is according to Gas Buddy. So I missed that one.
But let's just say, you know what? You always drop the high and you drop the absolute low.
Yeah.
So we just kind of dropped the low because who knows? Maybe we missed something.
And I do think Chandler seems to be lower gas prices in the south of the city. Phoenix, $4.25, $4.49. Gosh, North Scottsdale, $4.79. But overall, it looks like the south, the Chandler area, Mesa has the lowest gas prices.
Now, no one used this map to go down and get gas down there because you won't save any money. But I know what you're thinking. You're like, hey, maybe we can swing by and pick up some of that cheap gas.
Okay, so here's your quick real estate update. The median home price right now at the end of August is April. This is the data from August 1st through August 30th. The median home price is $438,000, a little over $438,000.
Looks like it just came down a little snippet.
Yeah, July was a little higher in June.
Mm-hmm.
Actually, I think that is June there, right about here. And then at the peak, that was May 2022. And then right at the bottom, that was December and January.
Right. Yeah, so really interesting. Bought a property at the peak and then sold. Yep,
Yeah,
and then sold the property at the low point. So that they can't tell you to do the opposite, right?
Yeah.
Interesting how that works. But that's okay. It's just that's the market.
Active listings, 10,323. Again, this information is all according to coming from the Cromford report, and this is what's reported on the MLS. 10,000. That's a small number.
It is going up a little bit. It looks like
it is starting to go up a little bit.
Barely.
And again, if we see interest rates starting to go down, we believe that we're going to see listings go up because the more the interest rates go down, sellers, we believe, will be relieved to see that homes are maybe a little bit more affordable. They're going to start listing their homes for sale. And we may see a lot more sellers getting on board with selling. Of course, this would take the interest rates to come down to that, 6, 5, low 5s or whatnot. But we could see a lot of listings come back on the market. We really do hope so because we need a lot more listings.
Yeah.
Months of supply, which is how long does it take to sell a home? Or if you were to, at the current rate of sales, how long would it take for all of the homes to be sold? 2 months.
Right, 2 months.
Which is,
and that's hard to get your head around. Like, does that sound good? It sounds good by just thinking. Ask your parents how long it took them to sell their home.
Yeah.
2 months, if you were to put your house on the market today, that's a really good number.
Okay, so this is a contract ratio map of all the major cities here in the greater Phoenix area. And I'm browsing right now and showing you what this really means is the colors. Let's look at the colors. If you see the dark red means these are hot seller markets. Okay. And then the green are more balanced and warm. It's just pretty balanced between sellers and buyers. So look at the red. We see Chandler, look right here, the 85225. It's kind of in a frenzy, they call it. You have, several in Tempe, but Chandler, some Gilbert, Mesa, pretty hot in the Southeast Valley. Kind of feel like a weatherman right now.
Well, I know. And and how often do we talk about frenzy? No one seems like there's something wrong with that word frenzy. Since when is there a frenzy? And there's only a frenzy because of the lack of inventory. Yeah. But that's a real word that people are using today.
Yeah. And there's so little homes for sale. So, and a lot of buyers, that ratio of buyers searching, right? We have a situation where it's a tough market. But Glendale has a lot of hot markets, hot zip codes. And actually, these are all zip codes that are the way they break it up here on the Cromford report. Surprise is they call it a hot market. It isn't quite red, but Surprise, Peoria. But what I notice is the green, the balanced and warm, is really more in this Scottsdale. And it's been so hot for so long there. Is that Arcadia?
Now, and it might have to do with medium home price in that area.
So high?
It's just so high.
Just a larger, it takes a lot more.
Yeah.
There's a lot less listings, the number of listings maybe.
A lot less listings. And if you look at the listings, again, the pricing is just really unbelievable. So if you're buying a home today, a lot of people are buying a home at a necessity, which are those outlining areas for that first-time home buyer or that second-time home buyer. Yeah. Just need to get that extra bedroom for the baby.
Look at that. Scottsdale at 85255 is pretty hot. And Scottsdale up there at 85266 up north. It might be DC Ranch. Interesting.
That looks like that is going to be way north, like Troon.
Okay. That's probably.
Or actually west of Troon.
Right. Okay. All right. So that is the map there. I want to show you one more slide here. I think you'll like this. Right here, we see that it's the contract ratio map. It's basically anything over here. You'll see this line right here that I drew. This is right where we're at. We're at a 67% contract ratio. And it's the number of contracts divided by the active listings.
Number of contracts as the numerator and the number of listings as the denominator.
So and the higher that number is, the hotter the market.
Right.
So you can
the closer you get to 100 means that basically not that every house being listed is under contract, but you have an equal number of contracts and houses available to see.
So it can go over 100 because technically you can have a lot more you can have more contracts than there are.
Yeah, couldn't you have
actives.
What is it? Probably go up to 200?
Yeah, this is like 280 because that was when because you can have like 1,000 listings and like 300 basically 3,000 under contract.
Okay.
That's just like but it's so anything you can see here, there's a frenzy, insanity, and maximum. Like we just hit, this is the time of 2021. We're just crazy numbers, big seller markets. But right now we are above the typical market from 2014 and through 2019. We're above those contract ratios from then.
Yeah.
So technically we're in a hot market or a good market. But really, are we? You know, there's so few homes on the market. Buyer demand is high.
You're in a hot market if you are a seller. If you are a buyer, you're thinking things are not normal enough for this to be a hot market. It's kind of a fake hot market.
Yeah. And a lot of sellers who are selling, well, they're going to become buyers.
Yeah.
So they're all, a seller becomes a buyer. Anyway, it's a very, very strange market, but we are showing signs that we are hot. And it's hard out there. So if you have any scenarios, any loans for a home purchase, refinance that you want Tom and I to look at, be sure to email us. You can call us, or you can, in the comments, reach out to us. Be sure to subscribe and like.
And also don't forget the reverse mortgage. We can help you with those too.
That's right. Take care, everybody.
All right. Thank you, folks.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.